Hello, Guido here from blockbuilders.net, and today we want to talk about futures trading on Bitget and how it actually works. I will show you how you open a position, how you close it, what you have to keep in mind, how leverage works, and other stuff. So if you don't have a Bitget account yet, I put a link down in the description. If you use that link to sign up, you can take part in special bonus promotions that they do every once in a while. So once you have an account, it's actually best if you verify your identity. So you need to do the KYC program. In order to do that, just click here on identity verification. I already did that. If you haven't done it yet, you just need to upload your ID card, front and back, and a selfie of yourself with your ID card. And that's basically it. And then you basically have a full functioning Bitget account. With that you can trade futures. There's a difference here between futures and spot. Spot basically means you are buying a cryptocurrency and the cryptocurrency belongs to you. So you can withdraw it and you can store it on a hardware wallet or do whatever you want with it. However, with the futures contract, you're basically trading the price of a cryptocurrency. So if you buy a future contract of XRP, for example, you don't really own the cryptocurrency, but you are trading the price of the cryptocurrency. There are several advantages why people trade futures and why the futures market is way bigger than the spot market. First of all, you can short cryptocurrencies. So if you think the price will go down, you can actually short it. And you can use leverage. With some cryptocurrencies here, you can use up to 100x leverage. So if you have $1,000 in your account, you could theoretically open a position worth 100,000 US dollars. However, I wouldn't recommend using a high leverage, but we will get to that in a minute. So once you have an account, there's just one more thing I want to show you. And you can basically go here to exchanges and then derivatives. And then you basically see that Bitget is one of the biggest future exchanges or derivatives, how it's called, exchanges in the world. It's around since 2018. You can trade more than 400 markets. And the fees are basically pretty similar to all the other ones. For me, for example, I'm in Germany, and we are, for example, not allowed to trade futures on Binance or OKX as well. So we have to use Bitget or Bybit. And as you can see, they have a huge liquidity compared to their competitors. So if you want to start trading, the first thing you need to do is you need to deposit some money into your account, and you can obviously deposit cryptocurrencies here and just click on deposit. Then you can select the cryptocurrency and deposit it. I did a separate video about that, or you can basically buy the cryptocurrency here. You can do it via credit or debit card. However, I wouldn't recommend it, and because they charge you a fee of 3.5% or more, depending on the cryptocurrency and the payment way you are using. So I wouldn't really do it. The best way to get some money into your account if you don't have cryptocurrencies is basically to wire some money into your account and then exchange it to a cryptocurrency. So for me, for example, as I said, I'm in Germany, it would be euros, and I can wire euros into my account, and then I can basically use them to trade. And I can obviously withdraw them as well. So once you have some money in your account, you have to know that there are several wallets. So there's a spot wallet, a margin wallet, a futures wallet, and a bot wallet. So I guess it's not hard to guess which wallet you need to use. There are actually two more. There's an OTC, over-the-counter wallet, and an earn wallet. And if you want to trade spot, you need the spot wallet. If you want to trade futures, you need money in your futures wallet. And in order to get money in your wallet, you can basically click on transfer, and then you can basically transfer money from one wallet into another. The transfer is basically instant, so you don't have to wait until the money arrives because it's there immediately, and you don't pay anything. So you can just send the money from one wallet to another without paying anything. And it's instant, as I said. So we already have some money in our futures wallet, so that's fine. So let's go back to our asset overview. And one more thing I need to mention, most of the contracts are traded against USDT. There are some contracts that are traded against USDC, and then you need USDC in your account. And then there are coin margin futures. Coin margin futures is basically that you can put some cryptocurrency here as a collateral. So for example, you could deposit Bitcoin as a collateral to trade. There's one big disadvantage with that. If the price of Bitcoin drops by 50%, your collateral basically drops by 50%. And that doesn't happen if you trade against USDT and you use USDT, because it's basically pegged to the dollar and it's a stable coin. So you don't have any price volatility. And that's why most contracts are traded against USDT. And then we can basically start trading. Let's have a look at the USDT contracts. I have the Bitcoin contract here, BTC against USDT, and it's a perpetual here. Most of the contracts on Bitget are perpetuals, so that basically means the contracts don't expire. On other exchanges, a lot of people there trade quarterly contracts. So the contract expires at the end of the quarter. In crypto, basically most people trade perps, so perpetual futures. That basically means the contract doesn't expire and you don't have to sell at a certain point. And as you can see here, most of these contracts are perpetual contracts. And then you can basically look at the chart here. Now you have one candle here is 4 hours. You can change that to 1 day. So to daily candles or hourly candles, a second or 1 second candles, and so on. And however, I would recommend using at least a 1 hour or 4 hour candle to not have that much noise on the chart. Then you have the order book here, in red all the sell orders and in green all the buy orders. And then you have the option to open or close a position. And you can select if you want your collateral cross or isolated. And I will get to that. So as I said, in trading futures, or when you trade futures, you are basically using your futures wallet. And so if you get liquidated because you are trading with a leverage of 1 to 100x, then you will basically lose all your money in your futures account. And you can't use the money that is in your spot account. That's why exchanges now have several wallets that users can use. And because if you're trading futures and you get liquidated, you're basically protecting your money in your spot and margin and bot account and so on. Only the money in your futures account is at risk. However, you can also do isolated or cross margin mode. That basically means cross. Basically means they use all the money that is in your future wallet as collateral. And isolated is basically you can say, okay, I only want to use a certain amount of money in my futures wallet as collateral. So you can only use that amount that you selected. However, most people will probably do cross and use all the money that is in their futures wallet. And then you can select a leverage here, or you can see with Bitcoin it's actually 1 to 125x leverage. However, I would recommend not using a higher leverage than 3. Let's go with 2 here, confirm. And then you can basically do a limit or a market order. A market order gets filled immediately. You just select how much of your money you want to invest. And then you can go either open or long, and it will open a position immediately. With a limit order, you can say, okay, if the price of Bitcoin drops, for example, to 80,000, you want to invest all your money, or at least most of it, and open a long position. Then they basically show you everything again. Then you can confirm. And then you can click here under open orders. You basically see your order. You can see it in the chart here, and it's an open order, and it only gets filled if the price drops to that level. And the order will basically stay there until the order will get filled or until you cancel it, like we do right now. And let's open a market order just to show you. Let's open a market order long here. And as you can see, we have now an open order or a position. And you can see under realized P&L the money we already lost for opening that position. That's basically the fee we are paying if we want to open the position. And then you can see under unrealized P&L the money that we would lose if we would close the position right now. Right now the price is a bit lower than the price we entered the position with, so we would lose some cents here. And then you can basically select a price at which you want to close. So it's basically a limit order for closing, or you click on flash close or close all positions to close it immediately. And we will do that in a second. And one more thing I want to mention. As I said, there are quarterly futures, and then there are perpetual futures that most people are trading. And in order to make sure there's a balance between long and shorts, there's something called funding rate. Funding rate is basically paid every 8 hours. You can see a countdown here. So only if you're in a position when this countdown runs to 0, you have to pay the funding rate. Right now, the funding rate is negative, so we are in a long position, so we would basically get 0.0008% of our money as funding once this countdown here runs out, because the funding rate is negative. And if we would be in a short position, we would basically pay that amount once the countdown runs out. Most of the time the funding is positive. That basically means if you're in a long position, you would pay funding, and if you're in a short position, you would receive funding. However, right now it's negative, and we are long, so we are basically getting the funding. And we can basically close it right now with the flash close, and now our position is closed again. One more thing we didn't talk about are the fees. There's a maker and a taker fee here on Bitget, or on most exchanges actually. So the maker fee is basically if you do a limit order, because the exchanges incentivize doing limit orders, because you give them open interest or liquidity for their order books. So that's why limit orders are cheaper. However, the limit order doesn't get, if the limit order gets filled immediately, then you would basically pay the market order price. However, if you do a limit order and it stays in the order book for a few seconds, then you basically pay the limit order price, which is 0.02%. And if you do a market order, you are basically paying 0.06%. So it's a bit higher. However, it's still fairly cheap compared to spot, where you're paying 0.1%. And that's basically it in terms of trading. And one more thing, you can also do copy trading here and automatically copy other traders. So you could pick one. So for example, him, you can see how his trading performance for the last 7 days, 30 days, 90 days, and so on. You should always look for someone who has who's going up slowly and doesn't go up like this because he got lucky just one time. You should look for someone who has a lot of successful positions, and then you can basically say, okay, I want to automatically copy all his next positions automatically, and then you can select an amount that you want to invest, and then it basically copies all the positions of him that he opens or closes for you, and you don't have to do anything at all. And that's basically copy trading. So that's it in terms of futures or derivatives trading on Bitget. If you have any questions about it, please feel free to use the comments down below. If you find that video helpful, please hit the like button and subscribe to my channel. Thanks for watching.